All right, so everyone's making their predictions for next year, including Goldman Sachs. And what's interesting about this, right, the 2024 forecast for returns, they're looking for everything to work out, right? Commodities up big, too. Stocks up big. Credit up. They're saying everything's going to be up. Bonds are going to be up. Even cash, they're looking for it to be up. So, hey, and everything rally. I'm okay with that. I want to bring in now Kobeissi, letter editor-in-chief Adam Kobeissi. Adam, listen. I know you've got some near-term ideas for us, but this is a little longer term. I know you're starting to formulate in your mind how 2024 is going to look. How's this looking for you? A little bit too optimistic for you?
I mean, the market has been very resilient, especially equities. I mean, they're calling for close to 10%, 12% rally in 24. Could it happen? Yeah, I think in the first part of 24, we're going to keep seeing some choppy price action like we've seen. We've really been in a 10% range for the S&P for the last few months. And after such a hot run, now we're seeing more headlines, more volatility. I think, we could, well, I don't think we're going to have a huge downturn, but I also don't think we're going to have a huge bull run. So some more chop to begin.
So more choppiness. Yeah. That means more selectivity.
Absolutely, yeah.
Right. One of the big themes, obviously, we can't get away from is the Magnificent Seven. An interesting observation. So far today, 35 new 52-week highs. Of all of these names, guess what they have in common? None of them are the Magnificent Seven.
Right.
So there are chances or ways to making money in this without having to be in those names per se.
Mm-hmm. Yeah, so we've been very vocal about the Magnificent Seven. They actually account for a record 30% of the S&P now. Can the market run without them? I don't really think so. Just as you saw in the last couple of weeks, once they started turning lower, Google missed on earnings, we saw NVIDIA start turning lower, the whole market turned lower. The S&P went to 4,100. Right. Now they're back. The S&P's back to 4,400. It's really hard to see a situation where stocks like these are going to lead the market in either direction.
You mean Pinterest can't lead the market?
I don't think it can. And also, it is a double-edged sword, right? Because when it's good, when the Magnificent Seven are good, it's great for the market.
We just had that conversation with Lisanne Saunders. In 2022, the Magnificent Seven were down 41%.
Wow.
And of course, you have people who come on and say they remember when certain segments like oil used to be like 25% in the market. Now it's like 3% in the market. Let's get to some of your ideas because I love when you share these with us. Trading ideas starting with the S&P. Short S&P right now.
Yeah, so we were long right into 4,100. We started scaling into longs. We got to 4,300. We started exiting. And now towards 4,400, we became short. The reason behind that, more of a short-term trade. I think we were on track for 9 straight green days. We need some sort of pullback here, but I do think dips are going to continue to be bought. The technicals are strong.
4,450 is your stop, right?
Stop,
so, okay,
correct.
Because I'm thinking 4,400 looks large, right? To me, I think we go to 4,400, we're going straight to 4,600, like in a blink of an eye, and that's your next big test.
Yeah, and our subscribers were actually up on this short already. This was something we started initiating this week. Today, markets turned lower.
Right. Crude oil, a month ago, the Hamas situation, Israeli war, Middle East crisis, everyone's talking $100 WTI. It's come down a lot. You're saying you think it's oversold now?
Yeah, I mean, I still think there is a premium for geopolitical tensions, and I also think that separately, demand is still pretty strong, stronger than we expected, than basically anyone expected, and OPEC.
Well, how do you explain the price coming down so hard, though?
Well, I think there's a lot of factors. So China is one factor that's
weak economy in China.
Right. And that's come up so many times, but every time that narrative has come up, the dip has been bought. And keep in mind, OPEC has made it very clear they're committed to higher oil prices, and the U.S. needs to fill the reserves. So there's a lot of demand just from
short gold.
government.
I thought you were a gold bug. I thought you were like the youngest gold bug out there. You're short gold?
So now we are. We had a run, and I think we are in a near-term uptrend, but I think it got way too hot, way too fast. And that kind of also plays into our short TLT trade. I think the Fed is bracing for a very long pause. I've been saying this on the show with you since July. I think the rate hikes are done, but that doesn't mean rate cuts are coming anytime soon. I think we're going to see.
But is TLT so oversold? If there's a pause, it won't. Will that give it a little bit of advance?
I don't think so. Also because people are attributing this entire rate move to the Fed. It's not all the Fed. Deficit spending is also driving rates. We saw the announcement from the Treasury about how they're going to start taking more near-term borrowing now.
And to that point, we should point out to the audience that we just had a 30-year bond auction that was worse than yesterday's 10-year bond auction. Yesterday, we got away with it. The market's held in there. Today, not so much.
It was a terrible auction, and that's when the market actually started turning lower. You saw gold start to trade in volatility. It's off the highs, and I think
that's about the demand part. That had nothing to do with the Fed.
With the dollar, a little bit stronger, too.
Great stuff, my man. Appreciate it.